I'm going to tell you exactly how to get started to make $500 a day when it comes to trading, and you can do this with as little as $80. And I'm also going to be breaking down options versus futures trading so you understand what I'm doing and how I'm making this money. I did this as well on Twitter, displaying all this information, and I have previous videos going deeper into my strategies as well, which you can check out. But let's not waste any more time. Let's get to work. I need to understand trading is not as easy as everyone makes it out to be, but I think we overcomplicate it and we jump right into the charts. But we need to understand who we are and what we're doing when it comes to this trading. Now, I want to let you know and really break this down as well, simple as possible before we go into the strategies and all of that as well. Okay. Number one, there's someone out there this will relate to. Now, it doesn't have to be exactly a $100 account to a $1,000 account, whatever it can be. But I'm going to use $100 and $1,000 to make the example. Let's say $10,000 is the goal. Now, why on earth would these accounts start at the same point? Like, why would a $1,000 account and a $100 account start at the same point? In theory, this $100 account at the $1,000, even though you're just starting, you're really, way further down the line. You're significantly, you're 10 times the amount of that $100 account. And people come into it with that same mentality of, well, I'm got to get to 10,000 X amount of days, and that's the goal, this and that. And they don't really have a strategy. And so this is what I really want to highlight to you, is that everyone is on this line, wherever it may be, okay? And I think when you look at options trading and you look at futures trading, you have to have a realistic approach of what you're trying to do there. And when you have less money, what people won't tell you is it's very difficult to trade options. So when someone comes to me and says, I have $100, can I make $50 a day trading options? I'm like, you think you're going to do 50% on your account a day, whatever your initial, I mean, it'll eventually scale down, right? But you're basically hoping to get lucky the first few times, and then you can kind of try to get consistent after. But if you're building your strategy based on luck, do you think you're going to be able to build it on a consistency eventually? That's the $1 million question, which I know the answer, and it's no. How you start is typically how you are going to roughly finish with those tendencies. If you notice you're having success with luck, why would you deviate from that strategy, right? And that's the big difficult part. Very few people will ever deviate from that luck mentality. So that's an important thing to understand when we look what's happening there. Now, before we jump into futures versus options tradings, I want to just explaining my point of view and how I view this for you, the consumer or the trader. For the past 3 years, basically all I've done is options trading. I kind of left futures in the past. I was doing that a lot, primarily in college, but recently funded trading became more available to you and me, the retail trader. I think this is a great barrier to entry, and this wasn't really as big of a thing when I was in college. So when I go into detail, there's definitely two different ways I have to view this. How much money do I have to spend on trading, and how much money can I overall risk with that trading as well? Because there's definitely a clear decision if you have less capital in this moment. And I also think there's a very easy way to get into trading and teach you some of the rules that you will only learn by experience with one of these strategies as well. So let's talk about it. The pattern day trader rule, which someone will always ask me about what's like really going on here. But again, this is very interesting, and what we need to be talking about as well is what's happening there. So what you need to know, basically PDT rule, you can only have around 5, I think, yeah, right? It's in a span of 5 days, you can only have 4 day trades over that time period with your broker account, unless you're in a cash account, which I recommend anyone use a cash account if you're trading options with under $25,000. You're dumb not to, okay? That's the important part. So you can get around this everyone talks about the PDT rule. It's dumb. Like, you just use a cash account. You can trade however much money you have in your account once a day. You get around the rule. So that's not a reason to be worried. Now, if you're using margin, then obviously there's more concerns, okay? The part that I think people with trading options should be a little bit worried about is the Greeks. And this is the part that gets difficult for most people, and where I think, in my opinion, you get a bigger edge when it comes into futures. And I'll explain why, especially for smaller accounts. So if you're just getting involved, I think options are significantly more confusing to understand than trading futures for most people. I think options over time, you will make more money, right? If you have a large amount of money, you will make more money trading options. And I think they're less risky on a larger time scale, okay? So what we need to understand, there's 2 things you really need to look at with options. Number 1, implied volatility, IV, and number 2, theta, okay? We'll start with theta. Theta is the time of the contract, right? So imagine I buy insurance on my phone, okay? Is it going to be more expensive to buy 1 week of insurance or 6 months of insurance? Okay, it's going to be way more expensive to buy 6 months of insurance. And what will happen to the premium on that plan, what I'm paying for it, let's say I'm paying $600 for 6 months for insurance on my phone. Every day, that premium will get less and less of how much it's really worth. Okay. And that's what an option is. That is essentially what you're buying. You're buying a premium on whatever product or stock you're buying. Okay. Now, what you need to understand is if your stock doesn't move, you lose money every day, basically, when it comes to options trading. So a timeline of how long you can take that trade, even if it's not moving in the direction you want, you already have something working against you. IV is basically how much it's moving, right? Are you going up or down? If you have something like Tesla, which got really volatile, went straight up after the presidential election, right? You go to Tesla and look what happened here, right? Just really quickly. Tesla's IV is going to be pretty high compared to a different stock, like let's say Walmart. It's going to be way higher because Tesla went up from $240 to around $360, right? Massive, massive move, right? And then now it's kind of chopping around. So it's something that you have to be thinking about is the volatility there. Whereas with futures, you don't. Now with futures, it's very simple. That's why I say binary. It's a two-way system. Buy, sell, the end. That's really all it is. So when we look at futures, this right here is basically it. You buy one contract and this is how much it moves. So you buy a NASDAQ, E-mini, you can go to more detail on that. We have the complete guide as well. The link's down below if you're interested for Black Friday, things like that, right? But anyways, so every point you move is a specific tick. Options are not like this. Options can start moving very volatile if you start getting a really big move and as well to the downside. Now, when we go into options specifically with understanding the money aspect, this is the big part of the video, right? I have to have this money in my account, especially if I'm on a cash account to be able to trade it. I have $500 to take this option on Nvidia, whatever it may be, right? So this is automatically handicapping me if I have less money in my account. Now, on the other side, this is where the opportunity is there for the smaller accounts, right? You go over to something like My Funded Futures or Top Step, and this is the big opportunity out there. You literally can get started with My Funded Futures, which I believe is top two minimum, maybe top one. They're going back and forth right now. Okay. $80 to start with. I would have said Top Step in the past is the best. However, they're making some changes with their live accounts, which isn't a bad thing. It's just they're not giving you as big of an opportunity with as many accounts as you could have used in the past. Okay. Top Step is $50, but once you get funded, you have to do an activation fee. So it's $200 for the cheapest account, which is $50K. I recommend if you're a starter, you start with a $50K account. Now, the other part of this is something that I've been explaining is that these will teach you some of the rules that you will only learn if you're forced to or by experience. That's the one thing I'm going to say. Okay. So what does this mean? Your daily drawdown. You can only lose $1,200 a day on your account. And again, if you're confused by funded accounts, I have a video going over that as well, specifically on Top Step, but they all work the same. And My Funded Futures are a little bit more lenient. Okay. So they give you a certain amount. So it says you can only lose X amount a day. 2, you can blow up your account. So you won't lose any money that you don't have. It'll just be the $80 you put in. But again, if you go under the drawdown of $2,500, your account gets blown up, right? And you have to restart your account if you have to. But it controls how much you're going to lose there. Whereas with options, let's say I start my account with $1,000 or $100. Once I lose whatever I have out there, right? This can control how much you're going to lose down the line as well, which again provides that better opportunity, in my opinion, for smaller accounts. And then the other part of this, when you start to look at what's happening there, you can stack these accounts. So once I get one account funded, and let's say I'm making $150 a day. Okay. You can make however much money you want a day on that account, but to control risk, let's say $100 a day, I can go and rebuy 2 more accounts and have up to 3 accounts with My Funded Futures, 5 accounts with Top Step. And then if I'm only making 1 trade a day, and let's say I'm making $150, that's compounded 3 times. That's really $450 a day off of just $150 profit, right? Across all 3 accounts. So that's very important to understand. When you're doing something with a little $80 to start with, and you're compounding it to $240 across 3 accounts, it makes things very obtainable. Now, again, with options, it's a little bit more difficult. Now, again, the more money you have with options, the better you're set off with. I don't think options right now are the best for small accounts. I think options are more difficult. They're harder to understand when it comes to small accounts. I think if you have money, awesome. You can do very well. It puts you in a very good position. But if you don't have money, it's going to be a very difficult game to play. Now, I'm going to go a little bit into detail with my strategy and what I've used, but you can watch my previous video from last week that really goes into detail. It's like 30 minutes long. It explains everything from my mindset to how I'm executing these trades and everything in between. But I'll give you a rough breakdown into everything that I'm looking at as well when it comes to my charts and everything in between. Now, very quickly, I'm going to go over my strategy, all my indicators, everything like that. You can watch my previous video. I'll link it somewhere here. So you can also, or I'll be at the end of the video, going into more detail, breaking it down. It's a very deep dive. Okay. So when we jump in here, I'm going to use the NASDAQ as example for you so you know. Okay. Now, indicator wise, all I use, again, this is very simple. We don't rely solely on indicators, but they help you out. Number one, go to your indicator, EMA. That's the one right there. Just bare bones minimum. You're going to go change the settings, make sure it's the 9 EMA, whatever chart you're on. And then I always make mine red. So if you ever see my video and it's a red line, it's always the 9 EMA. Okay. VWAP is your next one. Go and take all your bands off. They'll come with bands. I take all that off. Just bare bones VWAP. That's all you need. Okay. It's always my blue line. Those are two things that I keep right there. Right. Very important to understand that. The next indicator is going to be my volume. Now, this is a custom volume indicator. And if you're interested in it, again, you can check it out from Luxalgo. It'll be available but you can use any volume. You don't really need to use the one that I use. I like it. It helps me depict things a little bit easier, but understand that. Okay. The volume, I make a really good point in my last video going over how to explain continuation, etc. Okay. Now, the other part of this, what I use, people always say, do you use ICT? Do you use fair value gaps? I don't use any of that. I use key levels, which people confuse with trend lines. Okay. Key levels and supply and demand. Those are the two things that I use. I have big breakdowns as well on the channel. You can go look at clear titles all over my channel. Okay. Now, key levels. Let's make this very simple. How I approach them is a high to low breakdown. Okay. We start higher time frames, we work our way down. The higher the time frame, the more respected. So very quickly we can identify. We're going to just identify this previous high before you broke out right here on the 4-hour time frame right there. And we're going to go more into detail here as to why, and then we'll go a little bit deeper as well. So again, we'll just mark out all of our little previous highs back here on the 4-hour, and you also want to do your previous lows as well, which we'll explain here in a second. So again, we'll break that down here, right there. So automatically those are the levels that we have, and then we also have this one right here, your previous low right there. So again, this is on the daily, and this is just for the past like week and a half, 2 weeks, right? So as we look here, we just mark those out, and you can automatically see where price is respecting those levels. So what we're going to use key levels for are reactionary points. And that's how I trade. I'm a reactionary trader. I don't try to predict what's going to happen. I try to predict where we're going when we get to a key level where we're at, the reaction that we're going to get from that, right? That's what I try to do. So what does that mean? So let's go to the 5-minute time frame here. When we look at what's happening, and you're going to be able to use this across anything, futures, options, go back test it for yourself, right? So again, key levels. So we can see, obviously we're in a bear trend, and a few things to understand. I have the 90 EMA VWAP. If you're underneath the VWAP, you're in a bearish overall daily trend, in my opinion. If you're above it, you're in a bullish trend. The 90 EMA is really good for understanding the immediate trend that you're in. So if you're getting a quick trade, as long as you're below the 90 EMA, you're very bearish on the 5-minute, okay? Things to understand there as well. So again, we automatically are breaking below the 90 EMA and the VWAP. So for me, I'm looking for downside trade opportunities. Number one, that is what I'm looking for. Why? Because we're below the 90 EMA and the VWAP on the day. Those are things I have to understand. I want to trade the upside when we're above the VWAP and then maybe the 90 EMA. That's the big thing. So as we're breaking down, we're grinding below the 90 EMA, holding below. Now our key levels, you go straight through number one, 20,907. Then you come and you bounce around 20,086. Now what you could look for here is go down to even a smaller time frame, like the 1 minute, to get some of your scalps that are established at that point. So again, you come back to this level. What are we looking at? You come into that point, you can see we actually grind here and we find buyers. So you have opportunities to scalp back to the upside. And what you would do is you have a risk to reward strategy, whatever is based on yours, preferably up to 2R. So what I would do is that's a 2-to-1 risk. I'm willing to risk $1 to make $2, right? So I might lower this around $6, give or take. I'd lower it below 20,900 in case a wick hit me. And then I'd be looking for at least a 2-for-1 gains, which already right there I am going back into these previous lows there. Opportunity there. You hit it once, you hit it twice, you hit it 3 times, and you eventually break back out. You do it again, happens again, back into VWAP. Now, the other part here we're looking for is your reactions to VWAP consistently. You will always see, typically you will always see a majority of your volume near the VWAP. This is where an aggregate of your volume traded is sitting at. And this is where the market typically gets more active when you retest that level. So you actually retest here in market open, and then boom, you start tanking down. And then again, you go back to down your key levels. Again, you might have stopped out here, but once you break down, what are you looking for? Because really what you want to do is trade the downside here. So ideally what I said was a reactionary trade. So what you want to see always is a break, a retest, and continuation. because that's when you're going to get your biggest and your best moves, is breaking below the key levels and continuation. And this is time and time and time again. You can see this plays out: breakdown, retest, breakdown, breakdown. You never get the breakthrough, retest, and you eventually start popping back up. You get above the 90 EMA, and you can start trading it back towards your next key level. Rinse and repeat over and over and over. Now, I will say, I don't love trading the upside when you're below the VWAP, but the opportunities are still there combined with the 90 EMA. So again, you can use key levels however you want. You can take more opportunities if you want. Again, I think less is more, and that's how you're going to see your biggest and best trades on the day, where it breaks and retests of the key levels time and time again. You need to understand trading isn't a one shoe fits all for everybody. It's going to be really critiqued to how you want to trade and the lifestyle that you're currently living. If you have a 9-to-5 job, trading daily options probably isn't the best move for you unless you can work from home and kind of have free time and a little bit of freedom within your job. Now, if you're only able to trade at certain amounts of times and you're not able to trade the best times in the market for futures, and you don't want to be looking at the market all day long, then trading futures may not be for you as well. Because I'm going to tell you right now, when you're trading futures, you got to be able to sit there and lock into what you're looking at. Because if you don't, you're going to lose money. So I'm careful before I give any recommendations here, and this is definitely not financial advice, but if I have a smaller portfolio and I'm trying to take trading very seriously, I think futures is the clear path for success, at least to get started and get myself more money, right? So if I only have $500 to start with, $80 to start with, futures is the clear winner. I'm not going to start making $200 a day with $80. That's just not going to happen. But a funded account provides that opportunity. And I've demonstrated that time and time again here on the channel, that that is a real possibility. And I thought it was kind of a scam too, but it really does pay out. But I will say the whole point of funded accounts is to get people to fail so they continue to come back and back and back and pay more and more money. So if you're not disciplined, you don't have any type of self-discipline for yourself with trading and have a strategy, then yeah, you're going to lose money. And you don't have to use my strategy. You can use someone else's. This all still applies with the way that you're looking at this. Now, if you have more money and you have a good 9-to-5 job and you don't ever plan on leaving that 9-to-5 job, however, you want to take advantage of the stock market and invest in it as well, but have a little bit more risk than just long-term investing, then I think 100% with what we're looking at with options is a great opportunity. Now, you need to understand, if that's my mentality, then I'm not looking to trade every single day. I'm looking to make my money when the opportunity is there, right? So if Trump gets elected, what are the hot stocks right before that time happens or right after that time happens that look good? Crypto was a good name. And you had another name like Tesla that all ran really well. And these are just quick examples of things you could be looking at with swing trading aspects. Or if there's a new product released from Apple, like Apple Intelligence, the stock ran like $40. Taking advantage of where the opportunities lie, that's going to be your best bet there as well. I'm not saying you can't day trade options. I day trade options all the time. But you have to understand, every day in options isn't going to be a realistic approach. There's going to be days in options that you don't want to trade because the action's terrible. But in futures, there's typically an opportunity to make money 5 days out of the week, right? Because you don't need to make this crazy gain or swing or anything like that, or price in Greeks or anything like that. It's very quick binary buy and sell transactions. That's my opinion. That's what I'm doing. Let me know if you have any questions down below. Follow for more content. Have a good one, traders.